What's up, Outliers? Given this a second to turn on, I have learned that apparently it takes a few seconds. So we'll get kicked off in just a moment. I hope everybody's week is off to a good start. And we have a handful of stuff on the docket for today. I want to talk through a couple studies that I think might be useful for you to be aware of, at least, or to check through on your own time. And then I have a bit of a look at the FOMC rate statement. So we have a few things to get through on the agenda. So let's start with a quick look at the broad market. I suppose I'm going to grab a seat. And so this week, I think there's a couple things that are very top of mind. I think the biggest by far is going to be the Fed rate statement, and rightfully so. I totally understand why, because that's going to have a pretty profound impact. I think more so just on like market sentiment more than anything, but I definitely think we'll want to take a run through there together. Let me grab the chat so I can say hello to who we have hanging out. And so far we got Paulo and we got Elong Songs. Great to see the gang in town. Sweet. So Paulo says, I noticed that SPY calls are piling up. Let's take a quick look. What does that look like? SPY calls. Did you mean on the intraday or something? Because if you're using unusual whales or something like that, I'm guessing you were just looking at intraday. Because typically when we look at stuff like index ETFs and stuff like this, SPY, SPX, you'll normally see actually really, really heavy put skew. And that's because folks tend to hedge the downside. So I wonder if you're using like the market tide tool. Is this what you were using? Highest volume on the TradeStation scanner. Oh, you mean like a larger size trade or something maybe? That could be. Yeah, because almost always when you're looking at the broader indices like this, you're going to see absolutely massive put skew. That's kind of the standard. And it's because is different kind of hedge funds, hedge fund managers, pension funds, as they build and accumulate these big portfolios of individual stock positions, they can use one single product like SPY or SPX or whatever it is. They can use options in one individual product to then hedge their positions, which is precisely why generally you'll see this sort of configuration. Whereas when we're taking time and looking at something like GameStop, it's kind of completely different, right? Normally, what I don't even know what normal is in GameStop, but when we typically look at GameStop, we'll actually see really, really excessive call OI compared to put OI. And that's just because people are typically speculating in something like GameStop to the upside. So it's an interesting observation, Paulo. Looks like we got Generational Capital, Rama Llama, G36. Great to see everybody. Yeah, so if we take a look, it does look like there was some larger call positions ran through. This is GameStop. Let me grab SPY. Let's take a look at some TNS. Yeah, it's kind of like a mixed bag, right? So tons of puts as per usual. We can see today that 3 million calls traded against 3.6 million puts. Interesting split, though, for the put side being like essentially 47%. That's actually kind of fascinating. So let's take a look at the Fed Watch tool. I think we should start with, because, well, I guess we can start with this instead super fast. I'm going to grab this tool and we can just look through kind of what's coming up. And the main things that I think are worth flagging are a little bit later in the week. So obviously the biggest ticket items on here are going to be the FOMC statement. And that's going to be, I think, it's actually becoming way more spicy than I thought it was going to be originally, because it had started looking like it was going to be a 25 basis point cut. And then that was it. It seemed fairly straightforward. But as we're looking at this tool, the probability now of a 50 basis point cut is actually up quite a lot. And I think that's very noteworthy because there's a few reasons why this would happen. The very first reason why this would happen is because if there's expectation of heightened market turmoil due to elevated rates running for too long, because the Fed has taken such a careful and slow approach to their rate cutting cycle. To open the show with a 50 basis point cut that's actually kind of informative to me. It makes me think that things on the back end might be looking a little bit worse than we might be expecting. Now, one of the things, and I actually don't really know how this goes because I did an interview with Tom Sosnoff not too long ago for the podcast. And I love Tom. I always enjoy speaking with him. It genuinely is just a great conversation. For those interested, here is that. That's a link to that video with him. But anyways, we were talking about this idea of, rate cuts. And typically speaking, you'll hear something like, oh, the bond market determines rate cuts. There's different versions of that. And I got to lean back a little bit more. The old herniated disc, it's still there. Fun fact, I actually went for a consultation today. I think your boy's going to get an epidural in the next couple weeks, which is actually kind of hilarious because I had no idea epidurals. I thought that was just for pregnancy. And when they first said it, obviously I said it as a joke. I was just like, yeah, man, I have a pretty big herniated disc, but I'm not pregnant. Which they thought was funny. I thought it was pretty funny, but yeah, so we might be getting an epidural. So, we'll see what I guess we'll see what all the hoot and hollering is about those kinds of shots. It doesn't look super fun, if I'm being honest with you. It looks like a giant needle that goes through a lot of your back. And I take a lot of pride in my spinal erectors. Those are like the back straps. I feel like that's like one of the hallmarks of a well-defined back, like a strong, efficacious, work-focused back. And they're just going to shove a needle through there. So we'll see how that goes. I will report back, obviously. Ramalama says, my wife had one of those. Yeah, well, I'm about to join her. I imagine your wife probably had one of those in the process of producing a child, whereas I guess I am the child in this case because I'm getting it because my fucking back hurts. So I don't know if that works. G36 says, Ricky says, if they cut more than 25 points, okay, myself, my portfolio can only get so hard. Interesting. So Ricky, that's a fascinating question. So Ricky, talk to me about what that actually means. So why would the cut negatively impact you that way? Out of curiosity. Paulo says they numb the back before inserting the big needle. Yeah, that's word on the street. They use lidocaine or something. So we'll see how good that goes. I don't know, man. Just getting a shot in the back just doesn't sound great. But right now, being able to move and recover, not gonna lie, that sounds pretty great. So that's what I'm gunning for. Lance says Senate is pushing for 75 basis points. Yeah, Senate is just talking though. That's the problem. So when it comes to this rate cut, there's going to be lots of people with lots of opinions, and I think that I feel like the overall breadth of evidence that we see is, and this goes back to my conversation with Tom Sosnoff to bring us full circle on that original point before we got off on the tangent of my back. And when we look at the bond market, if we talk about the bond markets, determining when rates are cut, the problem I have with that as any sort of definitive theory is, let's look at it. We can grab, actually, I think we're in the right spot. Yeah, we'll go here. We'll grab my futures grid and let's take a look at the bonds, right? So if I zoom these out, let's do a 1 year daily, and then let's do a 1 year daily. So if we take a look at bonds and let's do ZB, and then let's do, instead of ZT, which is the 2 year, let's do ZN, which is the 10 year. And if we take a look at this, like the bond market, quote unquote, already priced in a cut. It priced it in back here, and then it priced it again here, and it didn't happen. Like it did not happen. So when we talk about it priced it in back here, right? So when I look at this idea of the bond market pricing in a cut, I understand the theory, and I understand it's not something meant to be taken literally. I'm kind of poking fun at I'm poking fun at something that's not actually designed to be taken literally. But it's more of a window, right? If the bond markets are showing a certain price level, then it kind of tells us that the Fed is going to have to do something at some point, but it doesn't obviously mean that they have to do it at a given point, because the main argument, again, that I would have opposing that is we've been here and we've not cut yet. So then that clearly tells me it indeed is not as bond prices force Fed hand. Because when I talk with Tom Sosnoff, he talks about how kind of the Fed is, I don't want to say superfluous, but that they have, he's just kind of a figure that's going through motions and doesn't necessarily choose those kinds of things. And I understand his point, but the main point of the statement, though, is that the Fed still chooses ultimately when to ease fiscal policy, which we are at a point that we are starting to see cracks in the economy. We are starting to develop, I think, some level of concern, at least. So I think that's why, we're seeing this become more and more topical at this point. At least that's, again, my general opinion. So, yeah. Ricky says, from what I understood, a bigger cut would mean that the Fed didn't cut rates early enough, meaning a recession is inevitable. I see what you mean. I wouldn't personally take it that direction, Ricky. It's not wrong, right? Because if they start going for bigger rate cuts faster, it does tell us they're seeing something that's spooking them, and it's forcing them to move faster than they may or may not want to, right? Because again, the Fed has really taken a very, very slow approach to this thing. So that I understand that argument. And if we do see like a surprise 75 basis point cut, I agree with you. In the longer term, I would expect trouble, because that's what I would read in between the lines on. In the near term, though, I actually imagine the market would probably like that quite a lot, because the market, again, is typically discounting out like 6 to 9 months. So if it looks good for half a year, then it's not going to get factored in too heavily just yet. But I do think that when we look at the overall market, if we start seeing really aggressive cuts, then I absolutely think that's the Fed kind of showing us a really important point, that they are concerned for something. Because my absolute expectation was going to be a 25 basis point cut, maybe 2 in a row, and then a pause. So now what my thought is, if we start seeing something like a 50 basis point cut, if we take a look at the aggregate probabilities and we get that 50 basis point cut, so then it goes 50 here, we would get another 25. And then it looks like they're talking about like another 50 after that. Like that starts to get pretty aggressive. So if we start moving that aggressively, I can't help but find that really, really interesting, because to me, it looks like we're going to be getting 3 cuts this year. I shouldn't say 3 more, because we've had exactly 0, but it looks like the 18th, they're looking at 475 to 500 basis points. So that would, again, be 50 basis point cut. Then here would be another 25 off of that. And then here would be another 50 off of that. So that essentially would take us down almost a full point, which I don't know. I am very curious to see if we get that aggressive, because if we do get that aggressive, I'm not super bullish in the market. Like, I'm not super bullish in the market. I'm bullish right now. Most of my positions are very long leaning right now, because the market is obviously trending up right now. But as I look across this kind of campaign that gets that accelerated, I really don't know how much I love that. I really don't, because the other thing I think about is I really was thinking that the Fed was probably going to have a pause somewhere in here. And I don't see a pause. And the fact that I don't see a pause until something like out here, which would be mid 2025, that's kind of crazy. Because the other problem that we have here is that, again, we're doing something that we really don't know how this goes. We've had this insane series of fiscal policies since 2020 that they all take time to unwind and move around. So I actually haven't looked. Let's take a quick look at what the latest probability of a recession is. I'm going to ask ChatGPT. What is the latest probability of a recession in the US? I'm very curious about that. Let's do Y charts and JP Morgan. Mac Chicken says 20%. I think it's way more than that. Yeah. So right now, this is showing, what is this? Number, like a 56% probability of a recession. And like, obviously, because this is looking forward. That's why you see it as this. So right now, for a year from now, there's a 62% probability of us being in a recession. And if we take a look at JP Morgan from the 15th of August, so this is about a month ago, this shows a 35% probability of a recession. And then again, if I had to guess, I think somebody like JP Morgan is probably going to lowball it. And the reason why I think they lowball it is because I don't think that they want to get super far into the weeds with all their clients and scaring people off, because they are a banking institution. So my guess is they would be very, very methodical about the way that they would roll that information out. So yeah, because they were saying that it was up to 50% 2 months ago. I'm really, really interested. Let's take a look through this. G36 says no one wants to get in on this then. Yeah. I think the problem is the way I look at the stock market right now is you're playing musical chairs. You are playing musical chairs. If you are long equities right now, you are playing musical chairs. And what that means is, depending on how this goes, most of the people are going to be left out. And the reason why I say that is because if you don't have a really good structure to take risks down super fast and not get caught, but then also not get tripped up in all the whipsaws on the way up that we're probably going to have leading into a recession, if there is one, it's a delicate dance. So actually right now, I'm actually in the process of working with a pretty large data set for the Patreon folks. But what I'm trying to do is model all of the previous rate cuts that we've had, regardless of circumstance. And then I'm plotting the performance of the stock market over a set period beyond the start of the rate cuts. And then what I'm going to do is filter then by conditions that are slightly closer to what we're seeing now. So that's one of the random projects I have on the docket, because I just think that kind of information is interesting. I'm just weird that way. But I have to say, when I look at this, seeing that pace of cuts isn't super bullish to me. And I think that the probability of people getting stuck is going to be severe. So one of the things that I talk about as a trader is like trying to see what the market is doing and then doing our best, like get in where you fit in with the market. But this kind of thing like this right here, the probability of a recession by the end of 2025 remains unchanged at 45%, which again, I think that that's probably a little bit low. And this is using the probability of a recession before the end of 2024. And again, the other thing that you have to pay attention to here is that probability of a US and global recession. They're very cautious with their words, because my guess is that if you think the global recession is going to be kicked off by the US, this would be a lower metric than whatever this would be by itself. So there is a bit of cause that I think they're trying to muddle a little bit, but we'll read through this in a second. Generational Capital says, does that change depending on who is elected? I imagine so. I definitely imagine so. I think the market perspective would probably weight those quite a bit differently. I don't know to what degree and how much of this is already cast in stone and we're kind of waiting for it to dry, so to speak, because the problem with economic functions like this is that they're very lagging, very, very lagging. We're talking about things that, like, we're seeing results of things that were done years ago, literally, and still kind of working their way through. So there can be other tricks to avoid a recession depending on who's in office and what their policy is. But I think the die is cast to a significant degree. So now if this means, again, and I'm not like a perma bear or anything like that. I'm not like some sort of, doom and gloom, everything's going to be shitty. For me, even in a recession, there's tons of opportunities. I literally just start fading the shit out of everything and take what I can to the downside, find elements of strength. Like, I don't care what way the market goes. So I'm not talking about this trying to like scare people or anything. But again, from a trading perspective, I do my absolute best to look at things objectively. And seeing this is interesting to me. Does this mean I think recession? Not inherently, but this does make me think recession not improbable is what I think. And depending on how this continues to roll, we'll have a much better path. Paulo says, Tasty Trade has a video saying that elections don't impact markets much. Paulo, you would have to get way more specific than that because it absolutely does. And again, it's not even a debate. It's entirely about, I'll grab a couple studies for you really quick. But it absolutely does. My guess is with their comment, it's probably predicated on a very specific point. I don't know what the point is, but there would be some sort of very specific point. So this paper talks about the impact of midterm elections. This talks about the upcoming election. I haven't kind of ran through this enough to have a really confident opinion on it, but this one is a classic that I've cited to you before, which is pre-election drift. And then this is about, not that one. There's another one. Here. So essentially, there's a breadth of evidence that points to, yes, there's absolutely an impact. And we can see the way that it impacts at what level, because again, this first one I actually really like, 'cause it talks about midterms versus presidentials. But yeah, there's absolutely an impact. So my guess, Paulo, is the Tasty Trade video that you saw is probably looking at a very specific thing. I don't know what the thing is, but you can say based on specific thing, the elections don't have an impact on markets. But when we say it that broadly, impact on markets, it absolutely does. So I'm sure it's just a translation thing, right? They probably said something very specific, I bet. But yeah. So yeah, definitely recommend checking out any of these papers because they'll talk about this stuff. Let's see. Shrey J says, I'm curious where the committee thinks the terminal rate will be. Well, I think Powell has talked about their target, right? Which is what, 2%? Is the most common. Powell's target interest rate. Let's see. Yeah, 2%. And that's about standard. They typically want rates to be about 2%. That's normally what we see. So yeah, Trey J, my guess is the committee is going to fall in line with that more or less. Casual in random says, anyone into Intel? Yeah, they had a big move. They had a really big move. So right now they're up to 22. They're up like 10%. I saw that come through. I thought maybe, there it goes. So for Intel, they're creating an independent subsidiary for its manufacturing business for customers, which this is actually pretty cool because this starts to shore up a little bit of confidence in just the production cycle. And I also think that they're leveraging, obviously, the financial incentives to do this, right? There's a giant grant that I think they got like a few $1 billion. So it's like, yeah, take the free money and also get some good PR out of it. So it says it would make its foundry an independent subsidiary with its own board of directors. Chip Giant also signed a multi-billion-dollar multi-year agreement with Amazon, AWS, to make some of its chips for artificial data centers. So that's kind of really important for Intel, I think right now, is to get into the AI mix, because not participating in that would literally be a kiss of death. Intel has been just struggling so hard for so long at this point. I mean, it's literally been on a 5-year decline. And I've traded Intel for a long time. I really like Intel as a trading vehicle, but it has just been torn apart. This is literally the prime time example of the stairs up, elevator down. If you take a look back in mid to late 2022, you can see we're trading around 26. We hit a high in kind of the end of 23. And then from there, we go from 50 down to 18, essentially in less than a year. Like, that's the quintessential stairs up, elevator down play. I don't have anything in here right now myself. I have tech exposure in NASDAQ futures and then a few other smaller things. This actually looks okay to me from like a variance risk premium play, if I'm being honest. The premiums in here are decent, but the timing of it is not great. This is all kind of mispriced, I think. I'd have to take a close look at it. But Casual and Random says lost 40K holding Intel and pass. Yeah, that's the tricky part. I mean, that's the tricky part of like choosing to hold anything, if we're being honest about it. And that's kind of why trading is a thing, is we want to participate in certain pieces of movement, but not necessarily participate in all the movement. That's the entire goal of being a trader. And I think a lot of traders get it twisted because they'll want to try to top tick or bottom tick things, meaning get things at the very top or get it at the very bottom if they're buying. And the whole point of actively trading is to essentially cut out the extremes so that your holding durations aren't going through these insanely volatile return periods, which again, it's really difficult to maintain holding positions and stuff like that. McLeod says, is the ratio put diagonal your favorite downside play? It depends on the play. Either long puts, ratio put diagonal, or short calls. I would say those are generally what come to mind for me. I have a couple shorts on as it sits, but yeah, that's kind of normally the way it goes, because it entirely depends on the thesis, right? So if we're talking about trading something short that we think has like a good bit of downside left to go, then I would rather trade a ratio put diagonal. I literally just put one on not too long ago in HAL. And it was just a super basic trade, but that's actually great news. For once, my timing on taking a trade down was good. I didn't look at what it did today. I thought for sure it was going to crater down further since I recently took my trade off, but look at me go. But yeah, anyways, this, like, for something when I'm getting in a little bit earlier, right? So if I'm entering as it breaks out below this level, sub 30, as soon as it goes below that level, I can make more money by buying premium and trading a ratio put diagonal than if I just sell calls against it. So for something like that, it's very specific to kind of the thing that I'm trying to trade. The other funny thing for those that don't know, it's not like I drew this line here when it got down here. That's not what happened here at all. And I've talked about this I talked about this trade a few times because I think it's a good case study, because the way that I came up with a reference point for where I thought this was going to go is I actually went way out in time and I went way back to here. And I used these points way back here. That's how I modeled this line. Again, before any of this happened, I was coming up with an idea on if it broke below this kind of 30 handle where I thought it might sink into. And you can already see where I have the next idea. If it falls through, which it still can, if it falls through this 28 handle, I would then favor it down to 24. Now, I got a couple kind of interesting comments on some of my technical analysis videos. Somebody was essentially saying, I forgot exactly what they were looking at. I have like 2 staple videos that walk through my general methodology at like a very high level. And one of their comments, it struck me that they were like kind of trying to read something as a book. And I was talking about IWM because most people know I trade IWM a lot. And they were telling me, they were like, oh, well, IWM rallied through this level of, congestion that you saw. And I think the problem with that is you can't read it linearly. When you're conducting technical analysis, it's not like take 3 steps and turn right 90 degrees and go that way. It's just not how technical analysis works. Technical analysis is way more like land navigation, where for those that have been in the military or done any sort of land nav, you know how that goes. You might have a pace count. You might know you have to go like 1.1 kilometers and you're going to count your best. But like, if you get to 1.1 kilometers and you don't see your box that you're trying to navigate to or whatever your point is, you don't just stop and be like, okay, well, here it is. I'm in the right spot. It's not here. No, like you then have to start your search pattern, whether you're going to do concentric circles, you're going to go a little further. Because you're like, I drifted a little bit this way. It's the same thing in markets. None of this is heavily precise. Even this, right? Like if we take this to the max and we take a look at these down ticks and then this dip below, like this doesn't line up perfectly. It lines up really well, but not perfectly. Because again, it's not a perfect style thing. Lance says, just don't give a fresh butter bar the map and a compass. That's hilarious. I love that joke so much because anytime that I put my Marines through any sort of land nav, they talk so much shit and they suck so fucking bad. It's my favorite. I love that that's become like such an artifact of the military, right? It's like the junior officer with a compass. They're not trustworthy. And I sit there and I think, okay, well, we used to do like little land nav courses and I'd be like, good, like get in teams of 2 and let's just go get a workout in. And all of a sudden these motherfuckers that have no problem talking a ton of shit, they can't find their fucking shoes. I'm like, you bastards. Well, I think it's all relative though. I've always been really good at land nav personally because I grew up in the woods. I'm a hunter. So really I mostly terrain associate more than anything. But I love that. I literally love that that's an artifact of essentially all militaries. It's the greatest that that's so persistent. Lance says it's them city slickers really. And you're not wrong there because new officers of any kind come from any kind of background and they are technically in charge. So yeah, I think that fear is completely warranted. Fortunately, I never really had to deal with that, but yeah, because I will tell you this, at TBS, the basic school, there's a couple land nav things that you go through and you can always see the people that sucked at it because if you fail, I forgot how many times you could test again because your boy never failed, but I would be going to the gym at night to go get a workout in when I saw all these sad people walking out from like the room that they get their points and they have to plot all their shit. I see them all walking out sad, back out to the land nav course, and it's like dusk. They're going to go run around in the dark for a while. And I just think, man, it's like, it goes back to that thing. If you get it right the first time, you don't have to fucking do it twice. some things don't play out that way, but land nav is one of them. You can, if you take your time and you do a good job, you can pretty much dial it in pretty well. But yeah. Reese is here. What up, Reese? Good to see you. Jake says, how do you find your trades to use a screener? Yeah. G36 says he uses a screener, live options feed, and other stuff. Yeah, it's like a mix of stuff. So I use different kind of scans that auto alert me to things that I find interesting, and I'll update that pretty regularly. I'll use a couple different things for that. I continually look at different scans myself, like manual scans, to look through and find ideas that fit very specific things. And then I'll poke through, like, everything that's built in my process is very, very specifically designed. So like, for example, the reason why you see these flagged as send to, and this is number 1, which is red. The reason why it's flagged like that is so that I can click that and it'll automatically pop it up on this little 3-month chart right above my head here. So I can flip through things super fast and see if they generally align with what I'm looking for a specific idea, if I'm looking for a specific idea. Right? So everything that I try to build is for efficiency. I'm obsessed with optimization. So I run manual scans like this. I have different reports that get sent to me from different scrapings that I do to look again for interesting things. And then I also maintain a few different watch lists. This one is like my smart pack. Again, it's a just military term for kind of like the shit you need in a small space. And this is like all market stuff, just broad market stuff. But then I'll maintain different watch lists that are being generated from these different scans, so that even if they don't trigger again for some reason, or if it's something that I want to follow up on, I'll have a set number of things that I'll want to look for. And then the other thing I use a lot is this from Benzinga. And they have 2 tools. Bar chart also has one that I like quite a lot. And I'll use them both differently. Bar chart, I have them email me the reports for different scans that I set up. And then something like this, I look at like the unusual options activity, which again, I can set up how I want to filter by, which is exactly what I do, because otherwise this can get a little rowdy. But what I'm looking for in here is stuff that draws my eye for some reason or another. So in this case, it looks like Carvana. It had the 165 puts at a larger size compared to volume versus OI. So that's, again, just maybe I'm interested in that, maybe I'm not. And then I also use movers on an intraday basis. So looking for things that are breaking out within a single day. This is honestly one of the easiest trades that I do on a daily basis. Is I'll find things in the beginning of the day that are kind of going through an orb opening range breakout. And you can find things that if you catch them early enough in the day and they exhibit certain behavior, it's a really, really, really high efficacy trade like this. Right? So most of the moves for these are going to be done within like the first 30 minutes of the day or so. But if I'm looking for shorter moves like this, it's one of my favorite ways to find them, is to find things that are gaining a ton of steam right at the beginning of the morning. Because the reason why I like to do that is I view it as super low risk entries, because I'm going to manage essentially using the either prior day or the low of the opening candle or when I'm choosing to get in. So like, say, for example, I want to get long Carvana on a day like today. Well, the floor after the open at this point is like 143. So if I enter here and then I get stopped out on the next candle or two, who cares? I don't care, because these are more of a statistical style play. I'm looking for things that are exhibiting really strong momentum for whatever reason. And it's always a short-term play. These are like intraday, maybe 2-day kind of plays, but as they move up, I'll follow them up. I didn't trade this one, but as an example, if I start, with a stop here and then it runs up, runs down, consolidates here, then runs up again, then the stop comes up to here. And then as it runs up, runs down, starts running up again, stop comes up to here and then up to here. And then I would have gotten stopped out in here on this move, because I literally would just ratchet on the term swing lows and slide it up. But the downside to stuff like this is to build a big enough position, again, for it to be meaningful for the account size. is not as easy, right? So some of these things, I know that they're there, they're really, really prevalent, and they're things that are part of the book, but I don't focus on them overly heavily. Like day trading in the colloquial sense is actually a really small part of my overall capital at risk at a given point in time. So yeah, the main way I look for trades is by combing the markets and looking for different things that are interesting to me for different reasons, whether it's something that's tied to an economic event. Like when we have FOMC coming out, I built a few trades in anticipation of that and the rate cut and the follow through and kind of the lead into the follow through that I think we're going to see. Already we can see it in something like Zillow. So I'll trade stuff like that. It's generally all over the place. Wiggly Worm says you're talking about going pure long for swings right now, not an options play. No. I would completely decouple them, right? What I'm talking to you about now is a profit mechanism. The profit mechanism I'm discussing is called an opening range breakout. Whether you choose to trade an opening range breakout by trading things like long calls, short puts, buying stock, it's essentially the same. It's going to make money if it goes up. So the way that I then navigate down into the individual kind of structure I'm going to use for the opportunity is going to be entirely predicated on what I'm trying to accomplish. So I think options traders do this all the time mistakenly, where they get wrapped up in what we're using instead of focusing on what to focus on first. And cheers to everybody. I got to take some drugs. Wiggly Worm says, thanks, I came in a little late. Yeah, no problem at all. I think that that's probably one of the most important topics to drive home, especially for options traders, because options traders always want to start trading options, rightfully so, right? Like that's what you're used to doing. And, you're taught to be an options trader. I get that. And I'm not saying you are, I'm talking, just in mass. But the problem is we have to get the correct profit mechanisms down. And then it becomes a high class problem after that. Because if your idea is, stock goes up and I make money, great. As long as it goes up, regardless of what strategy you choose to use in that instance, whether you wanted to, again, buy calls, sell puts, buy stock, you're going to make money in literally all of those instances. So then it's just a high class problem of how do I make as much money as I want to make, or how do I structure a position that fits in with the portfolio well? That becomes the problem set, which again, that's a super high class problem. It's like, okay, I'm making money and I want to make more money. Okay, well, let's go cry about that. So the joke though is obviously focusing as much as humanly possible on the profit mechanism. That's exactly how I find all my positions. Is I'm going to start by kind of following a really rigid approach to analyzing the market, analyzing the portfolio, and then looking for opportunities. So this video here is a video from this past weekend. And this talks about my approach to kind of analyzing the stock market to build trade ideas. And it is extremely basic because most of what I do at this point is not complex, but I've taken the time to refine it down to something that makes sense and something that is repeatable over time. So that's why I tend to take the kind of approach that I do. So G36 says, "'Twas a good video." Yeah, that's awesome. I'm glad to hear that. Wiggly Worm says, "Yeah, that's the problem I'm working on. You can guess my portfolio." Yeah, and I get that because, and I notice a lot of the folks from like the ape community, I understand what they're trying to do and I respect it. But the shepherd part of me is always trying to make sure that they're fully considering what they're doing and then the impacts thereof. Because I want nothing more than people to achieve whatever their goals are. And some people are, they are looking for just this crazy, huge squeeze. And then if they get it, they hopefully have a plan to cash in on it and then, live with their life-changing money. But what I try to remind people is, as much as I want that to happen, there's a game of what's the plan and what's the probability of the plan happening. And as long as people understand that expected return calculation, then I'm cool with it, right? Do whatever is right for you. But one of the things that scares me sometimes when I talk to various apes is it seems like the plan is just hold on to something into perpetuity, hope it goes up, and then somehow it makes money. And I don't say that lightly, because like the somehow it makes money point is said purposefully, because most of the people I talk to, if I ask them like, what's the liquidation plan? There really isn't one. And that's difficult, right? Because I want those people to succeed. But it's really difficult to succeed if you don't have those pieces aligned for yourself, because it's the same thing. If you go to the casino and you're counting cards in blackjack, you're doing a great job counting cards, you've developed some sort of house edge, and then let's say for whatever reason you choose to change to another game. You got kicked out of blackjack, you can't play blackjack anymore. Let's say you've made a bunch of money, but they caught you counting cards and you can't play blackjack anymore. Okay, well then you go play something else that has decent house edge, but not excessive. You can go play craps. You can go play baccarat, like some of those other lower house edge games. The problem with those, though, is that there's still enough of a house edge that if you sit there long enough, you're going to lose money. You might go through a favorable path and make some money, but unless you leave the casino with your money, it's more likely than not going to dwindle out in front of you. So that's the issue I see with most of the apes that I come across, is just making sure that they think through how they want to manage the position, so that if they do get to see this big anomalous move that they're hoping for, that if it does happen, then there's a plan to capitalize on it. Because I have to tell you, during the move that we saw in GameStop back towards the summer, I was trading in here. I've already talked about my trades in here a bunch of times, so I'm not going to dive into them for the millionth time. But the main thing is, you would absolutely better believe I'm offloading on these up moves. I wish I could like perfectly time it. I always mistime it. That's kind of like, again, I say it in jest, but I also want to make sure people hear that. Like even me, somebody, not that I'm that great at this, but I am a professional trader. And somebody like me that does this still does not, perfectly time pretty much ever. So, but I'm still trading the moves, right? Because if I buy stock at 10 and then it goes to 20 and then it goes to 40 and I do nothing that whole time, and then it goes back down to 10, let's say, for whatever reason, then I've made nothing. I literally have made $0. And that's one of the things that I think people have to understand when we're taking the time to look at the cat's work. Because he's showing people something really, 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 really important. Really important. Is that if we look through the cat's work, even this most recent movement, he's always using options in some capacity for leverage. But guess what? The positions change. The positions somehow change. That to me is really, really important, because that shows you that somebody that is as well revered as Roaring Kitty in the ape community, kind of the leader almost of a lot of the ideas, he is not just holding things. And that's not to shame or put down the DRS folks. I totally get their approach. Like, no problem. Like, do whatever's right for you. But here, the main point I'm highlighting is that this is an example of somebody that's trading the vehicle really successfully. You don't go from having $600,000 to over $2 million, over $3 million, then down to 2.25, my bad, to 3.6, to then 2. But like, this doesn't happen by doing nothing. He's actively moving around. And that's obviously what's working for him. And I think it's an important note for people to keep an eye on. Because if the idea is just hold, you're going to get just hold results. And if you're holding a company that's growing in value, then just holding can work insanely well, right? So if that's the thesis, but what I find with the apes when I'm talking with them, a lot of times the thesis, they don't line up because a big group talks about wanting to hold, but we want to hold for a short squeeze. A short squeeze is like a flash in the pan. It's there and it's gone, right? So if we think about that, they don't go together well. Something that makes sense to hold is if we look back over the history of Amazon and you really believe in Amazon, sure, hold Amazon. The company that literally revolutionized consumer, literally revolutionized it. Okay. If you want to hold that for however long you think makes sense, I can see it. That's not to say GameStop can't do that. GameStop absolutely can. But then you have to pose a different argument for the position. If you want to buy and hold GameStop, then to me, the thesis you're highlighting is you want to hold something that's going to pivot long term and turn into something that delivers a ton of market share and value. That's how you make money, by buying and holding, by companies that do that. You don't make money by buying and holding something that goes up 120 to 120, holding, and then as it comes back down to 8, you don't make that money. You see it, it's in the account, it looks cool, but then it's gone. So the main message I have for all this, specifically with respect to the apes, is, and it comes from a place of genuine like care and concern. I want to see that the apes do well, but I think it's really important to make sure that the thesis matches the position. And if the thesis is short squeeze, then the position, even if it's long shares, is completely fine. There has to be a plan for the long shares because the short squeeze is short-lived. So yeah, I think it's an interesting thought process to work through for people and to make sure that those kinds of things are reconciled. Ricky said, no way, Eric. The great Eric isn't always perfect. Yeah, rarely so. I find ways to mess everything up. It's kind of hilarious to me how frequently I just make stupid mistakes. But that is exactly how this game goes. The game of trading is fraught with mistakes. Wiggly Worm says, I think this is the lesson apes are just beginning to learn. Options have been so taboo for so long. It's enough to make you think it's FUD. Yeah, that's really interesting. It was really enlightening to me when I was learning more about the ape community and how you guys were telling me that options were like a no-go for a long time, which again, when we started going through Roaring Kitty's positions, 2 weeks ago, I was literally shocked. I was shocked that he had all options portfolios because my perception had been so skewed from what I've heard and kind of like the we don't like options stuff to see kind of somebody like the cat. And what I see for the first like very many iterations of his portfolio is literally all options. So yeah, that's just absolutely fascinating to me. Vladimir Off Putin says RK made trades on very few days between August 2020 and April 2021, maybe 25 different days he made trades in his position. Yeah. But I think that's still the point, right? Is that that's not buy and hold. If you take a look at a period from August to April, August 20 to April of 21, that's literally less than a year. Like that's not buy and hold. When we talk about buy and hold, that typically is holding things for at least a year, if not longer. So yeah, I completely agree with you. Off Putin is precisely that he is a great example of somebody who does not buy and hold, and he moves in and out of positions as he finds it favorable. You don't have to trade all the time. And that's another mistake new traders make all the time is they get confused and they think that like frequency or the number of trades that they're making is helping them some way. And that's also not the case, right? Most traders actually get too active and they get in their own way. But the whole idea is as a trader, is to trade enough so that it makes sense and you're able to produce the output that you want. But yeah, I think Roaring Kitty is a great example of somebody who does not buy and hold and somebody who trades pretty regularly. Wiggly Worm says apes are a bunch of people who are smart enough to recognize a short squeeze that got cut short due to the graph that the market enables and learned a whole bunch about market structure. Yeah, definitely. That's been one of the coolest things that I experience. Like, that's why I have so much respect for the ape community, is because I learn a ton from the ape community with respect to market structure and whatnot. Funny enough, one of my friends, Dave Lauer from Irvin, he and I mean, we've been in touch for a long time now. And we're actually, I'm going to be talking with him Wednesday. I think I do like a monthly podcast with them for Irvin on Wednesday. But like, I've learned so much about market structure that typically doesn't apply to me as a trader, to be honest. Like, I need to know how things move generally and some of the components. But the level of detail for something like the ape community is insane. It is next level layer of detail that, again, like, just from a trading perspective, I typically don't need that degree. But it's just super, super cool to learn about. I've tried to connect with a few people that I think would be fascinating from a market structure perspective, that I haven't quite been able to nail down just yet, but I want to take a look at that. Cool. I think I'm all caught up on the chat. Is there anything that we want to take a look at, by the way? Joseph says, have you done a SPY option analysis yet? We took a little bit of a look at it, but we can poke through it for sure. Let's see. Yeah, so still really heavy put skew. So 10.8 versus, that's a lie, 14.6 versus 5.5. If we take a look at volume, 3 versus 3.5. If we take a look at volatility, put skew, this is normal. So seeing way more heavy volatility on the put side is entirely normal. Let's take a look at the primary expiration. So 20 SEP, 18 Oct, 15 Nov, 20 Dece. And yeah, so I'm going to kill this front and look at these because I can see an inversion here. So there's a couple things in there that look interesting to me from again, like a trader's perspective. The kink that I see here, and then these inversions are tradable, specifically with 18 Oct and 15 Nov. That I see more specifically, so something like the 580s or something like that. If we take a look at IV, relatively low, 17%. This is showing an IVP of 80, so obviously, we've been in a relatively low VIX environment. I'm actually surprised that IVP is quite that high. Simply because, I mean, I can see why IVR would be so low. This is actually a great example of why it's important to track IVP and IVR separately, because it kind of helps a little bit with monitoring different movements and volatility. But I mean, we're closing in on highs here. So my guess is, as we come into this week, because here's the other thing when it comes to SPY specifically, is that the internals to SPY still don't look fully healthy. So we're seeing things resume normal trend, but we still have energy that's really beaten down, and we still have tech that still is, it's actually rotating over here, right? So it's been on a bit of an up move. It's not doing bad, but it's not doing well, because this is still, again, like a pretty significant 3-month downtrend where it ran from 238 down to 190. And as we all know, SPY is still very, very tech heavy. So I actually think for SPY specifically, the bigger question is, how does tech perform? and tech looks dicey. So right now I have a long futures position in tech, but essentially I'm carefully monitoring the downside here and ready to pull the trigger essentially as soon as it needs to happen. And it's the same thing when we look at the Russell, because the Russell has been on a tear. And I think part of this is playing catch up, but how far it goes in catch up, I don't know yet. And it doesn't necessarily look super bullish here either. So right now, the way I'm looking at the general position is trying to pay attention to what the indices are doing, how they're behaving at these levels. So like, for example, the Russell, I really care how it deals with this, right? Does it just kind of chop around in this congestion area for a little bit before breaking up above? So something like this is, I think, really, really topical. And it's going to be important to see how these handle here. Because again, you have to remember the market is not waiting to hear that the Fed is cutting rates. The reason why the market is not waiting on that is because the market has had a pretty good idea that we're coming into it already. So what that means is the market would be very sensitive if there was not a cut. I would near guarantee, I wouldn't call it a flash crash, that's kind of dramatic, but I definitely would expect a pretty significant pullback. That I feel confident in. So it's not like the market is like waiting to hear the Fed say, well, I'm cutting rates by blank. Because my thought is the market is already generally priced in the 25 basis point cut. Now, I do think if it's a 50 basis point cut, the market will probably show a little bit of follow through. And I still expect it to show a little bit of follow through when it's actually announced. But that's why you've already seen this move. It's literally why we've already gone from 2090 to 22 and change. It's exactly why. Because the market is front running that expectation. That's what happened here when we thought it was happening previously. That's what happened here and why it came back down. So the market is going to continue to try to front run the move, which is why most of it, I think, is probably in here. So 1 second, guys, says the market doesn't crash on no cut unless Bank of Japan announces a rate hike. Yeah, I don't think a crash, but I definitely would absolutely expect a pullback. If there's no cut, again, it's less about there not being a cut, and it's more about the implications of there not being a cut. And the other thing is the market, again, is already generally priced in the cut. So if there is no cut, it would have to undo that pricing, and then it would also have to forecast the ramifications of no cut when one is expected. So does that lead to a crash? I don't necessarily think so. But does that lead to a pullback? I would bet very favorably for it. So for example, and like I'll put my money directly where my mouth is. If there is no cut, you will find me short futures. Unless, and again, nobody ever knows, but unless there's some sort of just crazy motion and it starts flying on the news of no cut, obviously I'm not just going to blindly fade an up move like that. But I would be very ready to be short on that move if for whatever reason that happened. And it's, again, just because of kind of those internals that we just talked about. Joseph says, Chewy looking good in ASTS. I had ASTS for a little bit. I actually came down for a small loss, I think here. But it still looks good. I think ASTS looks absolutely fine. I think I was trading actually put spreads. This was one of those examples where I was trying to use verticals, but yeah, it was fine. It would have been okay, but I was able to take it down for essentially a scratch. So I moved out of it, but yeah, this I don't think looks bad in here. It definitely looks like it bit here. So the way that I would look at something like this is that would become the new floor. And it looks like it needs to clear this. If I can get my little alert to pop up, there it goes. And if it can clear above that, then I dig it. But yeah, I'm just kind of really carefully watching how it's moving in here, because this is an example of watching a pattern unfold real time, right? And that's kind of the cool part about markets is we don't actually know what's going to happen. But what I can see so far is it kind of has a little bit of a flag pattern going on. And again, like, I don't care about stupid pattern names and stuff. I don't paint them too heavily in my mind. But if this starts to descend back down into this and continuing this downtrend, that doesn't mean that it can't break up above this. It absolutely can whenever it feels like it. But it does lead me to kind of favor a downside movement until it gets further down into this. So yeah, I think that's what I would be waiting on personally, but I don't hate it. I would be careful though, if I had a basis that was essentially below this 2610, to follow it too far below that. But this is all short-term trading. This isn't like a long-term trading perspective. And then Chewy. I think most of the move here looks like it's made its, yeah, it looks like it's made most of its move. It's hard to see like the reference area for how far above it breaks above this. But I don't have a position on in Chewy anymore. I was trading it a little bit, specifically for earnings, and then I've come out of it. But I don't dislike it, that's for sure. The question, I think, in Chewy becomes like, where's the reference? And again, like you can see that becomes maybe a bit of a proverbial floor. And then there's some old congestion in here, kind of like this range. Maybe something like this. So then for me, that would place next target something like 35. So for me, this doesn't look interesting to the upside to take something from like 3260 to 35. That's not my preferred move, but it doesn't look bad. Like if somebody's long in there, I think it looks completely fine to the upside on the short term. The problem is on a long term, like Chewy still looks fucking terrible. And it's, again, just objective analysis. If I go out, this is not a company that's growing effectively. This is a company that's gone from 120, hit a low of 14, and is now bouncing around in the 30s. So does that mean that Chewy is dead? Obviously not. Chewy can absolutely navigate its way out of here. Again, I would feel very confident in that. But it's always an assessment of probabilistic outcome and where is the best place for the money. I was actually thinking about trying to do something to take a look at, like, I think some sort of meme stock related options trading video. I haven't figured it out. That was actually somebody's suggestion that I like a lot. And the reason is because like the way that I would trade meme stocks is completely different than the way that I trade most other stuff. And the reason is because I feel like with meme stocks, in order to make money, you have to come up with kind of one or two different ideas. You can have Vladimir Off Putin says, I suggested that. Yeah, shout out to you. Credit to Mr. Off Putin. I remember it came from somebody because it's a good idea. And the way that goes down, in my opinion, is very, very disparate. Because if I'm trading something like a meme stock, so to speak, well, I have to be really thoughtful about how I want to position the trade and for how long. Because when we look at meme stocks, the problem that we generally will find is that they move, but they move really briefly. They move very briefly. They're there and then they're gone. So that creates a bit of a problem. So to capitalize on that, you have to have a really quick way to move. 1 second guy says, you definitely have to understand volatility. If you don't understand that, stay far away from meme stocks. I partially agree because, again, I think people overvalue volatility. And volatility is super important. I don't want to be, misunderstood in that context. But what I try to remind people is unless you are purely isolating volatility, direction is more important. Hands down, direction is more important. So if you are really, really good at determining a direction and you can trade a direction, then volatility will impact the decision, of course, especially from an options trading perspective. I don't want to overpay if I don't have to. Like, there's all these nuances. But no matter what, if volatility is high, I buy a call when volatility is high. Not ideal for the call, but if the stock goes up enough, it doesn't matter what volatility does. And typically speaking, if volatility is high, I buy a call and stock goes up. Typically, volatility will come down. As long as the delta move is bigger than the contraction in volatility, then I'm good. So that goes back to understanding profit mechanisms, in my opinion, because I agree, if you're trying to trade options in a meme stock and if you are isolating volatility directly, like you're gamma hedging or whatever the case is, yes, you need to have an intimate understanding of volatility. But from what I see from a meme stock trading perspective, I think the issue that most traders fall into is just using really short-term options. And again, that's less volatility. Volatility will be a part of it, but it's trading things that are at essentially the zenith of their decay cycle. So most of what I see is like people going out here and they're like, okay, I want these 36s, because another mistake that I see, actually, I'm going to start taking some notes about, I don't know, what's the video name? Maybe like 10 common options mistakes for meme stock traders or something. But one of them is the profit target. And the reason why the profit target matters so much is they make one of the most common errors I see, where it's like, if I think Chewy, for example, is going to go up, and for whatever reason, I think it's going to go to 36. Most of those options traders that don't know what they're doing will pick 36 on the strike because they think it has to go to the strike to make money. And it doesn't. It doesn't have to go to the strike to make money at all. I can pick something that's further out of the money if I'm so inclined, or I can pick something that's already in the money if I'm so inclined. The difference is all baked into the way that this 36 strike will behave comparatively to other strikes. Maybe we'll do this on a live session. Maybe what is this, Monday? Maybe the Wednesday live session. I'll take a note. For the Wednesday live session, we could do like options trading for meme stocks or something. I think that would be fun. And then we can go through like common mistakes. I'm taking a couple notes here. I think that would be super fun. And yeah, because I think that there's a lot to derive from that kind of study, but the main thing is just being thoughtful of how we're constructing a trade in conjunction with the profit mechanism. So in this case, the profit mechanism is meme stock movement. What does that mean? Typically higher volatility, bigger price swings. Okay. So then the way that we classify and categorize that kind of movement will inform what kind of option structures make sense to take advantage of, again, that profit mechanism, that classification. So yeah, I really like that idea. Thank you, Mr. Off Putin. You are on Putin today. That's a great suggestion. Thank you. Generational Capital says TLT options. Yeah, let's take a look at some TLT. Mostly call side, no surprise here. The reason why we're going to see call side is normally this would have put skew, but this is an abnormal time frame. And the reason why this is abnormal is because the market is absolutely expecting bonds to continue to go up, especially as the rates cut. Because while we'll see some of that being priced in, it cannot fully be priced in until it actually happens. Bonds are a little bit different. So in this case, you'll see a little bit of a push up and through. This has been one of the easiest trades that I've had. It was very annoying for a long time because it was a carry trade. Anybody that's been following the channel for a while has seen already me talking about where I think this is going to go. I don't even remember when I set these. I wonder if it'll tell me. And because I set these a while ago. And it's because I think that this is one of the easiest no-brainer plays out there. And accumulating TLT through this has been kind of a really easy choice. The problem, though, is there's an opportunity cost. So from a lot of the position I had via essentially a covered strangle, but then I didn't want to tie up the capital in it for that long. The yield is fine, but I can still use that capital and get a better yield in a box spread. So what I started doing is just buying calls. And I mean, that's all I'm doing in here is essentially just trading the upside. So if we take a look at the options though, as we're looking at, definitely call skew. I want to see how centralized that is to these fronts. So it's 2.9 million. Let's do all of September. Look at that. That's crazy. So of the 2.9 OI, all of September combined is 766,000 of that. So then let's clear those out. Let's look at October, 440. And then let's take a look at November, 224. Take a look at December, 438. So a lot of these are actually pretty far out. Jan, 459. So there's some people playing the really near-term moves. And then my expectation is for these longer ones. Let's take a look here. Yep, exactly. So a lot of these longer ones are essentially at or in the money, which is really, really interesting. So if we look at just the call side, we can see current spot price is 101, kind of like right where this is. And we can see that there's essentially a critical density over here. So people are kind of playing the directional movement with longer term options, which makes a lot of sense, especially if you're playing this for a longer term thesis. So something going out again, yeah, like these 17 Jan 25s look great. And you do something like the 100, maybe a little further in for me. Yeah, look at these 85,000. So people are playing this move heavy. So if you grab these 100s or like these 95s, I mean, all of these are pretty liquid. Even these 98s are pretty liquid. Like 15 cents wide. I mean, that's a good market. So yeah, I actually really, really like this. I think I have a slightly different position built, but overall, I think it's a solid trade. And then we can see that the market definitely has some vol set up for the 18th. So that'll be one that I try to trade zeros, but very carefully. So the reason why is, and this is another interesting thing I've been noticing, is for 18 SEP, we're now up to 20.8. Just literally a day ago, I was actually playing the relative value between these because towards the end of last week, I saw this inverted where the follow-on expiration was slightly higher. So I traded, it was a super small move, but I traded the expansion of this vol already. And then my plan is to trade the contraction in that. Dejan says, what type of arbitrage, if any, do you look for in the market? It's a great question. So arbitrage, it's so important to be so specific when we talk about arbitrage. And it's not in the instance of trying to make it, you know, pedantic or annoying, but it's literally because arbitrage means very specific things in specific contexts. So in this specific instance, I think arbitrage that I look for as a trader is very, very different. And I'm not looking for actual like multi-market risk-free positions that I can put on. I will look for different kinds of pairs arbitrage, or I will look for things like merger arbitrage. Stuff like that is absolutely on the docket for me, but that is a slightly different thesis. So yeah, there's like cross exchange arbitrage, which right now there's actually a lot of awesome opportunities for small accounts. Like if I had a small account, that's one of the main things I would be doing right now, because it's very limiting by capital, but the prediction markets are fantastic for that. So yeah, a little bit, but not like a ton. Vladimir says, put DJT in the title of the meme options guide and people will swarm. Is that like a really big thing right now? I guess DJT is kind of a, yeah, I mean, it definitely is a meme stock, but I guess it's been pretty topical. Yeah, we can talk about DJT in there. What are like the main meme stocks you guys think people trade? I would say CJT, GME, Chewy is a big one. I think AMC is another one I see a lot. I see ASTS. I don't know if I would call that a meme stock, but I guess just because it's popular right now. What are like the other like big meme stocks? PLTR. Ah, thank you. That's definitely one. Let's ask ChatGPT. Current meme stocks. Yeah, what's the deal with Lunar? That's another really interesting one. What's the draw there? Ah, Siri. Yeah, see, I fucking knew you guys would be the exact people to ask. Siri, BlackBerry, Bed Bath & Beyond I've seen too. Yo, that's interesting. So Wiggly Worm says the OG meme stocks are Macy's, Koss, and Nokia. I literally had no idea. That's fascinating. That's so fascinating. IoT? I haven't really heard much about IoT. Take a look at IoT. Ricky says, Palantir is a meme stock? I thought they were legit. So here's the thing. I think meme stock has like this really terrible connotation, but I really don't view it that way. I literally just view meme stocks as stocks that are popular in social media for whatever reason. Like I would consider anything that is, again, like generally popular in social media for whatever reason, a meme stock. And then I think, depending on how much it can be moved or floated and stuff, that's another part of the profit mechanism. But BlackBerry, get this. ChatGPT adds 2 to the list that I wouldn't have expected. Tesla and AMD. I would not have guessed that. I guess if you're taking it from like Wall Street bets, though, maybe that would make sense. Paul says I saw a guy calling Nvidia a meme stock on the FT comment section. I could kind of see that. Again, I guess it depends on like what we consider a meme stock. But if we consider a meme stock something that's just like currently popular in social media, for a while you couldn't, like walk down the road without somebody saying Nvidia. So like I could see that. 1 second guy says that's because the data in ChatGPT is 4 years old. Let me check their sources because I actually think the sources are pretty recent. So the source that it's citing is this one, which is from 11 June 2024. So not quite 4 years, a little bit better than that. And then it's also citing this one, which is from 17 May 2024. So that doesn't look 4 years. What's this one? This one. I'm just grabbing this. I have a specific like ChatGPT trained. I'm actually training it for the Outlier community, but I always have it include sources at the end so that I can look at it because I don't trust ChatGPT at all. So I make it show me where it's getting its stuff from. So these are the sources that it's grabbing from. So it looks like 2SEP is this one. Yeah, so these are all relatively new. So yeah, 1 second guy, I actually think it's a little bit better than that, thankfully. Because I know what you're talking about though. Every once in a while, I'll ask it for, some sort of like market update or market news or something. And it'll be abysmal where it'll give me some like super, super old school stuff. 1 second guy says you're pretty good at this. I don't really know what this is, but yeah, hopefully the information's good. That's the goal. Off Putin says it used to be that if the company filed for bankruptcy, the meme crowd would drive the price up. That's interesting. And I could actually see that that's a really interesting thing. Mac Chicken says use Perplexity. I don't know if I like Perplexity more than ChatGPT yet. I've tried essentially all of the primary ones so far, and I'm conflicted. I don't know if I like Perplexity more just yet. But yeah, anyways, that's super interesting on the meme stock stuff. So yeah, I'll think of like a video that I can talk about there, hopefully, like specifically like trading options in meme stocks, I think would be really useful for people. because one of the goals is to try to, again, help. I don't care what anybody wants to do with their money. It's always their choice, right? Like that's the thing, is I want people to do what they want. But the thing that kills me is, especially with options, when people get twisted up pretty fast. And what I mean by that is they're placing things that are kind of doomed from the start. And I literally hate seeing that, because it's easier to go around. It's easier to like try and find a better structure for a thesis. The idea. Tommy says, in your default prompt to ChatGPT, you can tell it to say, I don't know, if it doesn't know. Helps with it saying fake stuff. Yeah, I find more often than not with GPT so far, I just have to be very explicit with what I'm looking for, which again, it doesn't, no shock. It's a language model. So I would expect it to behave like that. Yeah. Let me see. GNS has been popular for a couple of years, but no option. I don't know shit about GNS. Yeah, penny stocks, not my bag. I do not play with penny stocks. What is this? What do they do? What the hell is this thing? GNS stock. GNS. Meme crowd loves penny stocks, yeah, which makes sense, right? Like cheap stocks. That's one of the, again, that's one of the things that makes me nervous for the meme stock traders, is that they tend to focus on super cheap stuff. I feel like they just kind of miss the idea of like the concept of like a down payment, putting money up, but expecting to get more of it back. Off Putin says GNS is a foreign weirdo scam stock with a nutbag CEO. What is this though? AI powered wait, how new is this? Is this the right? Am I on the right thing? How new is this stock? March of 22? Is that correct? What am I looking at? Yep, that's it. Okay. Thanks. Let's see what these guys are. Can you guys see that? I can zoom in. Let me know if that's better. I can zoom in a little bit more if we have to, but I think that should be okay. All right, let's see. Leading the AI education revolution. Wiggly Worm says, NVIDIA has been paying startups to buy their hardware for AI. Oh, sure. Yeah. We are the world's most powerful AI education acceleration platform. Students, entrepreneurs. Oh, so interesting. So what? We deliver AI training and AI tools to students. 5.5 million students. That's a big user base, man. 20 million in pro forma revenues. Experience 10x revenue growth 3 years. 10x by 2030. Yeah. The pro forma revenue is always a little bit of a red flag. Like I want to see what actual revenues are, but they lean on pro formas to cite them. I'm an angel investor for those that don't know. So looking at stuff like this is a big part of what I do on a day-to-day. Like right now, my angel investing has slowed down quite a lot because I've been moving way more heavily into like real estate, but I still maintain anywhere from like 4 to 10 angel deals at a time. So I spend a lot of time looking at this stuff. We sell shovels. I hate that they're using that. We sell shovels for the AI. That's just like a personal preference thing. It's like a pet peeve. It doesn't actually mean anything. Like my analysis, just saying I don't like it. We sell shovels for the AI gold rush, upending jobs and education status quo, ill prepared for the uncertainty and upheavals of the disruption. The fuck does that mean? Like literally, what the fuck does that mean? Have they said explicitly what they do? AI training and AI tools. But what is that? Paulo says pro forma might include a wildly optimistic monetization. Exactly. That's the problem with pro formas is I notice it in real estate deals too. When I'm evaluating real estate deals, I'll see people cite a pro forma, and that's actually always one of my primary filters for a real estate transaction is if I see a pro forma that's slightly ugly but honest, I will take that every single day over a pro forma that looks really, really good, but all of the assumptions are essentially best case assumptions. I hate that. That is one of the biggest red flags when you're looking for any sort of pro forma analysis, because it shows honestly just a really inexperienced operator. Because if they're too focused on bringing in money and not the actual analysis of the deal, they're focused on the wrong fucking thing. So I'm not about that. So that's literally a absolutely solid point, Paulo. But yeah, like this, I just like what yeah. This is the first time that I'm seeing anything related to like specifically what they do, but I still don't know what they do. So you can join a course, meet an AI guide, personalize your journey, follow a personalized learning path. Okay. Build your learning profile. Okay. So this is like the first glimpse I've seen of like what they actually do. So who are they selling this to? I would imagine this is like a B2B thing, but this looks like B2C. Join for free. Personalized daily steps, diplomas. Oh, Jesus. What the fuck is this? Wonder if Elon knows he's in here. I'm going to tag him on Twitter. I just tagged him. I'm actually genuinely curious if he knows he's in here. Because my guess is he probably doesn't. Which I just don't like that stuff. Okay, so B to S and B and BSC. Lance says, next news, GNS tanks from Elon backlash. That would be hilarious. Wiggly Worm says, that looks like an AI Elon Musk. Yeah, this all looks like AI, doesn't it? Because I don't know where the fuck that is. I guess he has like decent hair. So that, I mean, it still looks like AI, but yeah, Wiggly Worm, same page. Yeah, this is crazy. See, this is why I love the stock market though. How fun is it to look at shit like this? Because this, right? Like, if this is the case, I actually love the idea of some sort of AI-driven learning structure. Like, I think that's fantastic. But one of the biggest issues that the standard education system has is a lot of requirements and hoops that you have to jump through in order for it to be, legitimate. So it's like, I'm so curious how accepted this is. What's the adoption of this kind of thing within these entities? Because I would imagine it's not huge. Yeah, see, like, again, 2024 and 2030 are internal targets and should not be viewed as financial forecasts. So this is 6 million students. That's not bad, though. I'm not going to lie. If they're already touching 6 million students, I'm wondering how they're getting to that number. But that actually is not bad. That looks really, really good to me. But I'm curious how. Okay, so here's actual money. Revenue's growing massively. I see that they took the liberty to round this up instead of 5.5. Isn't that kind of funny? Always find that kind of funny, right? Because there's decimals here. It's not like they were shying from decimals. It's like those little kind of things like that. I'm always just like, what y'all doing? I don't care about your pro forma. Comps. Udemy is like a good one. I wonder how Udemy is gonna. Yeah, look at this. Their price to their 2024 revenue is obviously trivial, but it's all based on, literally all based on kind of bullshit, to be honest. This is actually a cool slide. The world's most powerful AI education and acceleration. Man, this is crazy that this is their actual business pitch. Not bad, but like I would not, this just does not look that good to me. Because the problem is like they're talking about all their aspirations, which again, I get, you have to put that in front of people for the opportunity. But what I'm failing to see is like, what's the decisive plan to connect these dots, right? So when we talk about the genius students, also, this is another really important point I just realized, is that this is genius students. This isn't like school students. So it's like, I would want to know what's the expected market penetration by these different things, and then what's the specific on-ramp for them, right? Like, I don't see any of that stuff. So Speedrunner says, classical education built the modern West that got you all rich. Let's all keep that in mind. Yeah, of course. But education is really good. But something like this education thing, again, like their pitch specifically, I don't love. Wiggly Worm says, this is a real sector to invest in. I'd be interested on how to take a broad position. Yeah, that's a really great way to think about it. So the first thing you can think about is you can break down the opportunity into sub opportunities. So we can have stuff that's based on, let's say, for example, the infrastructure, the enablers. So the actual equipment that this kind of company might use or other similar companies will use to put forth their offerings. Then you can take a look at, again, they do the work for you, right? And they give you other companies that are in the similar space already doing this stuff. And we can take a look at them. So if I squish this down, and let's take a look at some of these. Actually, I'm just going to slide it over here so we can take a look at a chart. So the top one here is DUOL, which Duolingo is overall crushing it, right? So there's one, although it does look like it's starting to come into like a triple top. But if you like it from a broad perspective, like that's kind of the range that that's running in. Let's zoom this into like a 1 year daily. Then they give you DCBO. So one of the things I notice, again, for the first two that I've looked at so far is that they're downward sloping, right? So that matters to me. So if I look at like GNS, downward sloping massively. It's gone from 12 down to 0.6. That's a massive decline. So if I look at DUOL, they are still upward sloping with heavy volatility. So I would view this as kind of like the favorite of the group so far. DCBO, negative sloping, retracing down from 56. Not terrible, but not better than Duo. RBLX is crushing it. So if I look at them, they're starting to penetrate this level and they're breaking out from a recent consolidation level. This actually looks really good. So the way that this would look is something like at or below here becomes stop criteria. And then initial price target would be something in there. And then let's go out further. Actually, like really range bound. Oh, it's drizzling outside. Check that out. Something in here, I guess. So that's another though. RBLX. Then there's U, which is coming down. So the favorite so far is DUOL and RBLX. NTES. Bad. Spot. Odd. Odd. Why is Spotify in here? Why? Wait, why? Why? Why is Spotify in here? Do they have AI education? That seems like a loose comp. Because the others I can see. This, I don't actually see the direct relationship here. But this looks pretty good. So yeah, to go back to the original question though on how to play a thesis in it, this is essentially the way that I would look at it. Is I would say, what are the things that are really running the thesis that I think make sense? And here we have a pretty clear example, I think. Wiggly says, feels like their lunch is going to get eaten by Google, Microsoft. Maybe. There is something to be said for small, agile companies. That's why we still see them emerge from time to time and like really do a good job. So that could be the case. But I also can, like, if they have a good business plan, I can see the ability to penetrate, but it's just not easy. DBX running sideways. Mac Chicken says Spotify has some strange ventures for sure. That's fascinating. Let's take a quick look at Spotify. I'm just curious, like, what the involvement. I always thought of them as just like a podcasting platform, like not. Let's take a quick look at Spotify. No, I don't want my podcasters thing. I want Spotify stock. And nope. I have to look up like investor relations. Here we go. Okay. Let's see what they're doing. Also, we never hit 69 viewers on this live stream. I've fallen off the wagon. I gotta get my life back together. Sorry I let you guys down. Damn. Sad day for us. We'll get them next time. Let's see what they're doing. Strong revenue, high profitability, experiences. Yep. So Oh, interesting. North America's been contracting. Whoa, that's real interesting. I didn't expect that. Interesting. 26, 24, 22, 2018. Like, that's a bad trend. So it looks like literally this bucket of rest of the world is really what they're leaning on here. I wouldn't have expected that. Also contracting premium subscribers from the US. Would not have expected that. That's kind of remarkable. This actually doesn't look as good. So this tells me that the way that they're actually struggling a little bit. They might be profitable because of what they're charging advertisers and stuff like that, but like their premium subscribers actually, which again, like this is what the advertisers are going to look at to determine how much they want to invest. So this is actually really, really interesting. Here we go. Spotify Basic, ad-free music. So this is all music, countdown pages, podcasts. Yeah, so I don't actually see anything getting into like AI education. And to me, it looks like they probably put them in their deck. My guess is because they wanted to just flag something, like exactly. They wanted to have something that's running a high price to revenue. And look at, yeah, it drives up the average massively if you include something like that. So that's all that is. It's bullshit. Interesting. Etsy, Coursera, I could see. Udemy, I could see. Wow, really interesting. Spotify looks good though. Spotify looks really good. Wiggly Worm says, respect you for dissecting the heck out of this. Yeah, man, this is the fun part about being a trader is you get to learn about all these different things. And then if you come across stuff that looks good, you get to turn them into ideas. You get to learn more about the world, technology. I love this shit, man. Like, it's exactly why I do it. But Spotify does look decent. Put skew. But I mean, they're running. So then the question is, where do you think it goes? This could be like a short put kind of thing. This could be looking at like a 359 from 338 target. Gets you $500 as compared to maybe like a long call. Something like this 330. Pick up $3,700. 359 gets you to about 1,000. Here you can do 2 of those and get your 1,000. I kind of like that. Not so bad. All right, gang. Well, that wraps me up for tonight. I need to go grab some dinner and walk the dog, but actually super, super fun. I love going off on these little rabbit holes and seeing what's out there. So thanks for hanging out. We have our Outlier Pro live stream tomorrow. And then the Wednesday live stream, I'm going to try to think of something that we could do on like trading meme stocks with options. That's what I'm leaning towards. And maybe doing like a mini series or something like that so that we can talk about that process, analyzing the product, structuring trades and stuff like that. So absolute blast hanging out, be an outlier. I'll see you guys later.